Hello to everyone, my name is Gregor and welcome to our new update Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at the S&P 500, DAX, Aussie, Gold, Euro, Dollar, Yen, and also quick look at Aussie Yen. So what's going on? Well, we are seeing some limited upside still on stocks because of speculation that Fed may do more hikes with their interest rates. Because on global scale, the inflation is still the main issue. Last week, readings, for example, from the UK was again back above 10%. So clearly, there are speculations that more rate hikes uh, could be possibly seen in the next meeting. So obviously, this is why we are seeing some resistance here on stocks, because as you know, if the rates goes higher, then obviously there is less cheap money available to be invested into the stock market. On the other hand, you still have these credit tightening conditions after recent bank issues, and that's another thing why there can be some economic slowdown and potentially limited upside on stocks here. But from an Elliott wave perspective, as you know, we've been tracking this triangle for a while. I still think it can be the case, and now we are tracing out wave E, while the VIX is trading at the lower side of this 2022-2023 range. So I think it's very important area here, because each time when we were trading down here for the last year and a half, we have seen a recovery, meaning that there was a lot of fear while the S&P 500 came to the downside. Okay, so I'm wondering if maybe we can see some similar movement now back to the lower side of the range. Now the triangle obviously here that I'm tracking is the bullish one, meaning I will be expecting more upside, but I'm aware that wave E could potentially see more weakness, especially if there will be a pop-up in fear here. However, once we will have this ABCD legs in place, I think that eventually we will break this 43.30 resistance. This could maybe happen even earlier if I'm wrong, but this will be the key resistance for me to look much higher. So if maybe someone is bullish now and want to be early on this stock market move, maybe rather look at the German DAX, because German DAX, German DAX here, as you can see, is probably consolidating. Okay, so I think that this can be ongoing impulse with room for more upside. More importantly, we see the previous swing highs now trying to be as a very nice support. So I think that there is a chance for more upside towards 16,000 in the near term, maybe even slightly higher. So I think that regarding the bullish view on equities, I think that German index is looking much better than S&P 500. Now let's take a look on the Aussie dollar. Now Aussie is coming to the downside. We've been talking about very weak currencies, commodity currencies for the last 2 weeks, if not more. And looks like that these weak commodity currencies like Aussie and Kiwi are now becoming even weaker. We have seen inflation on Aussie in Australia improving a little bit. So this is another reason why the market is falling now, and looks like that we are going to see a retest and even break these 2023 lows, which after all it's not a surprise, because we know that we've been tracking this recovery as a counter trend movement. Now if we are tracking wave 5, final leg of this bearish sequence, then we know that we need 5 subwaves, and so far you're still in this wave 3, so much more weakness could be seen as long the market is trading below 66.80 short-term invalidation level. Okay, so watch out for more weakness here, and clearly this could be even accelerating if stocks would really come even lower. Okay, the US markets, of course. Now, while we have these commodity currencies in a pullback mode, it's not a surprise to see gold also slowing down a bit. But again, these are just temporary correction within uptrend. I think that recovery will resume at some point. But if we respect characteristics of the recent price action, then clearly that was a 5-wave movement with a wedge formation or ending diagonal in a wave 5. So current counter-trend movement should then be in 3 waves. We recently broke this wedge trendline support. So I think that that was the first wave A, and you are now in a wave B rally. So it could be quite challenging times going forward, but I think that eventually we will see more upside, uh, and ideally this will happen after 1933. 1935 levels will be retested, which is the area for former wave 4. Also, whenever I'm tracking the higher degree correction after spotted this completed 5-wave rise, I want to see the price to retrace at least 38.2%. So that's somehow my minimum downward objection before I may look for a new continuation higher. So clearly that's not been triggered yet. That's why I'm saying that maybe some more weakness could be seen. Looking at the RSI divergence line, also maybe this one could potentially cause a new reversal down when wave B will reach slightly higher levels here. Looking at the euro dollar, euro is somehow sideways at this very important 2023 highs. I'm still observing this recovery from mid-March as a corrective, meaning that can be wave B as part of a higher degree ongoing ABC formation, maybe as a flat, maybe even at some point as a triangle. But the reason why I'm looking for this to be limited upside is because there are overlaps. Okay, so this overlapping price action means that market is not that strong anymore because impulses are very strong moves, and impulses you need to have 5-wave sequence without overlaps. Well, here we clearly had some very strong move, but in the first leg, while the following legs, you can see clearly there are overlaps. So in my opinion, this is still ongoing temporary strength that could eventually be reversed, maybe already later this week or maybe at the start of next month. So I'm looking this to be a wave B. Now, even if we just will maybe try to consolidate here a little bit further and then we see another push higher, I still would be would look for midterm resistance and potential then a reversal lower. Okay, but obviously I would adjust the wave count maybe into this WXY formation, maybe even still some kind of a ending diagonal here is possible as well. Okay, now why I'm sending an ending diagonal, because we have here euro currency index where we see this ongoing 5-wave recovery with the wedge formation. So clearly this wedge suggests that bulls can be losing strength, and that's why we should be aware of potential limited upside here. Now, if US notes will continue to see more strength, which after all may not be surprised because we can see some very nice move to the upside here on the US note. So you can see 5 waves up followed by 3-wave correction. And now if price can break the upward trend line, then I think the dollar could potentially see some setbacks. And that's when the euro dollar could really maybe see a new high here. But if this would be the case, because recently correlation obviously has been lost a little bit, but if this really would be the case, then my focus would be on dollar yen. Okay, dollar yen weakness. Why? Because clearly, as you know, higher US notes means lower US yields, lower US yields. This has a typically very strong correlation with dollar yen. So if US yields would come to the downside, dollar yen could do the same. Okay. Also, you have the first Bank of Japan meeting with new governor this week, and of course, this could put in some volatility. But on this yen crosses, in fact, we can already see some weakness on ASEAN and other similar pairs like Q yen. But I really think that we should be a little bit more careful still with potential breakouts, because keep in mind that inflation is coming to the downside in Japan, and maybe they will not be looking for any new shift in policies just yet, especially regarding the yield curve control. However, if there will be any kind of a talk that yield curve control could be removed or adjusted, then I believe that Japanese yen will see a very strong movement, and this could be obviously the upside, meaning the dollar yen could see more weakness. So in such case, of course, I would be looking for potential shorts on dollar yen. But for now, since we are just trapped in this range and not moving much, I really want to see firstly the break below 132 to make sure that weakness is really happening. Okay, so for now we identified 135 as correctly as a very important resistance, but still this is not an impulsive drop yet to make sure that wave 2B has ended here. I want to see a 5-wave drop here and then short pullbacks, and definitely 132 should be broken. And if that can happen at the same time when the US yields will come to the downside, or when then that trend line that I showed you on earlier chart, let me show you once again here. I think that then obviously dollar yen can have much more downside potential. Also, dollar yen will probably impact other Japanese yen crosses as well. In fact, Aussie yen is already moving, so if dollar yen will join the weakness, I think that this one could very easily revisit these levels. Looking at this price action from an Elliott wave perspective, clear ABC correction, so we see this as a temporary movement, while current drop is already acting very strong, very impulsively. So again, impulses, as you know, are made by 5 waves, especially when you have the previous recovery in 3 waves like this one. So I'm expecting this kind of a structure to unfold, 5-wave movement. And if you look closely here, that's still not a 5-wave movement. It's wave 1 followed by a correction. We're tracking this one very closely recently and predicted correctly this breakdown. So that's the wave 3 now. There are some supports that we should watch for: 161.8% fib extension, and then you have the former swing wave B high low. So clearly there, that's the area where wave 3 could maybe end and cause the wave 4 rally, which could later on maybe even offer a new short opportunities, while the market is obviously trading below this level. So that's the invalidation level. So as long as we are trading below that level, there can be more weakness after the rally, because we know that wave 4 must not make an overlap with wave 1. If that happens, then you know that market is not an impulsive trend anymore, but rather just in a corrective movement. Okay, viewers, thank you very much for attention. I hope that you enjoyed this video, and talk to you soon. Bye.